Hey traders, welcome back to the FXE YouTube channel. Hope everyone is having a good weekend. In today's video, I'll do a top-down analysis of Dixie and EU and analyze the markets to give some ideas where price may want to go to next week. I'll also include some trading ideas for Monday. So let's get into the charts and have a look in more detail. Starting with the fundamentals, the early part of the week is really quiet. So could help with my trading bias for the week. Then on Wednesday night we have FOMC. So this is the one thing to keep an eye on, as we may see a lot of movement in price. It says Thursday here, but as I'm in Japan, it's Thursday morning, so the rest of the world is going to be Wednesday afternoon or evening. So after the last inflation reports, you can expect the interest rates to go up. Expectation, I believe, is 75 base points. But as I said, based on the last inflation reports, it could go higher. This could very likely trigger a reversal based on the analysis I'm about to share with you. And then on Friday, we have PMI for Europe and UK during London session. And then we have PMI for the US during New York session. So let's move on to Dixie. So just going to start on the yearly first. I just want to give a quick reminder that on the yearly time frame, technically, we're still bearish. Even though we've been pushing so much, I mean, structure-wise, we're still bearish. We tapped into the yearly supply, and we've had some reactions off of it, but Dixie continues to push up higher and higher. So clearly, for the time being, it's still the order flow is bullish, but just wondering what's going to happen from the supply, if we're going to start to see some reaction off of it or not. So let's move down to the monthly time frame. So monthly, as you can see, is extremely bullish. We swept the last level of supply that was over here. And the monthly supply is quite a ways above. And we haven't even tapped into the previous supply range as well. So eventually I could see the price getting there before we really start to see a real reversal or not, if we do, from this area. Now let's move on to the weekly. So weekly is also bullish. We swept the last level of supply already. On the weekly, you can see that we're reacting off an order block to the left. It's not so easy to see, but there is one here. It's the last area before the expansion to the downside. So we're reacting off that for the time being. You can see after tapping into that, we had a bearish candle. We've come back up, tested supply since then. But now the big question is, what's next? When I look at this on the weekly, it looks like we're going to get continuation. If we just check the fibs, I believe we already tapped the 50%. Yeah, so we've already tapped the 50%. So this is the last leg to the upside. We had a pullback, came into the 50%. So it seems logical. Sorry, I just switched my chart on accident. Yeah, so it seems logical that we see continuation from here to the upside. And then if we go to the daily, So daily is also bullish. If we start at looking at the supply above that we reacted off of, so this is that order block that I was talking about. So just let me go back to that exact date. Where was it? Sorry, wrong date. Okay, it's 2002. Yeah, so if you look at the order blocks, so you can see the price ranging in this area, tightening, the last manipulation candle, taking out liquidity before expanding to the downside. So this last candle is actually the area where price reacted off of. So we tapped into that refined. It's a daily time frame, but it's refined compared to the weekly, and we had a huge reaction off of it, and it initiated a push to the downside. So there is some significance in this zone, but since then we had I believe it was CPI that pushed the price right back up because of the inflation fears. So if you want to look explanation on that, so really quickly, inflation fears means that it has to be fought with the increase of interest rates. So the expectation is, okay, now that we have higher inflation, the inflation rates are going to go up, and because of that, the dollar spiked up. And then after that, we had some consolidation in this area. On Friday, we came back up, tapped back into supply. So I'm using these wicks as supply. Then we had a reaction off of that. If you look closely, we also mitigated this doji candle before reacting off of it and pushing down. And most of this happened like in the middle of New York session, so we pushed up aggressively, and then after that we reacted off supply, came down quite significantly, then had a retest, and then pushed right back down. So when I look at this, I see some confirmation that supply chain is holding, for now at least. As of yet, it's not really clear what happens next, but if we go with the reaction of the supply chain, there is some potential for price to start coming down from here, at least for the short term, which on this time frame, I mean, could last for days. Anyways, let's move forward and look at the 4-hour time frame. So on the 4-hour time frame, I would say the structure is bullish. My analysis on the daily is less apparent on this time frame, but what we can see is that price came back into supply. So on this supply zone, it's really clear, the last bullish candle, including the wick, we tapped into that. We also swept the previous high that I mentioned, so this was the last manipulation before the huge push down that we had the week before last. So it kind of looks to me like this could be the last manipulation before we start pushing down, because it did take out the sellers that got into the market from the last push down. And if you think about it from the institutional point of view, that's exactly what they would target. The sellers that were previously in the sells take them out and then bring the price down even further. So after we tapped into supply, we had a huge reaction off of it, so you can see that with the wick. Then after that, the next candle, it retested the extreme of that supply and then pushed down even more. Then the next candle, we had an inside bar that retested supply, so it came back up into this supply area, and then we had a reaction after that, and then price started to push down again. So unfortunately the market closed before we can see what happens next. I mean, I wish it would have stayed open just a few more hours just to see if this candle would continue down and break the lows or not, but unfortunately it closed, so we don't know, or we don't have clear any clarity what's going to happen next. In terms of my bias, if we think about structure, I'll stay bullish until I start to see lows go. In terms of what my analysis tells me, I feel like Dixie is coming down from here. If we start with the bullish scenario, what we could see is potentially a retest of this demand area that's at the bottom of this range, and then after that have a reaction and then reversal and continue up to attack the highs. But as I said, looking at the individual candles and trying to understand what the institutions are doing, I feel like Dixie is going to come down from here. We may consolidate in this area come Monday morning, or Asia could immediately start that continuation where New York left off on Friday. Kind of similar to what we saw last Monday, actually. Last Monday, if I remember quickly, when the market opened, I believe we gapped, and then after that, the price just continued down, if I remember correctly. At least that was the case for EU, the opposite direction at least. So if price does come down, the downside target for me, well, the first downside target for me will be the 4-hour imbalance and the 4-hour demand zone. That's assuming that price can make it down there, and if it does, we need to see the reaction at this level. Regardless if Dixie wants to come down further or not, we'll likely see some kind of pullback in that demand zone before it continues or it reverses. It's really tough to go beyond that, but if we break this demand, I feel like Dixie is going to target the daily demand next, which would be like way down here, probably in this area. Let's just have a quick look on the daily. Yeah, so somewhere way down here. So that last doji candle, which would probably be this entire area here. But at the same time, we need to keep in mind when the Fed announces the interest rate hikes, it could start mooning again. So if I go with what my bias is telling me, we could continue down for 3 days, and then on Wednesday evening or afternoon, wherever you are, the FOMC announcement will be made. The Fed will announce the interest rate hikes. Depending on the result, it could have a massive reaction on the price of the dollar. I mean, potentially, based on what we saw on the CPI candle, if they only increase to 75 base points, which is the expectations, it could be a disappointment actually, and dollar could continue to push down. but if they do something like double it, then obviously that'll have a massive result or a massive impact on the market, resulting in probably the price is mooning from wherever it is at that point. So anyways, those are my thoughts on Dixie for now. Like I said, I'm thinking, at least for now, it'll probably come down at least for 3 days, and then when the Fed speaks about the interest rates, or the interest rates are announced, it could have a massive reaction on the price, potentially reversing it, maybe even causing some continuation. So let's move on to EU. So I want to just give a picture and a reminder on the yearly time frame, but Forex.com doesn't show it, so let me go to a different data feed. So this is IDC. So I mentioned in one of my previous videos that IDC has history way before the euro was even invented. But anyways, if we look at the yearly chart, you can see our structure points, high, lower high, higher high, and we're coming down to create a lower low, higher low. So technically we're still bullish. We're still bullish on the yearly time frame. And this demand right here, it's actually a 3-month demand that we've tapped into and somewhat reacted off of. Not sure if this is going to hold or not. Probably will eventually go, but for the time being, it is acting as a reaction point. So anyways, let me go back to Forex.com and then go to the monthly time frame. So if we look at the monthly time frame, I mean, you can clearly see it's bearish. Price has just been pushing down like crazy. Almost consecutive bearish candles all the way down, except for some consolidation in between. And so far this month, we've created a doji candle, and based on the price action the last 2 weeks, it does appear like there is a lot of indecision in the markets right now. So let's move on to the weekly. So on the weekly time frame, as you can see, the last candle was a huge doji candle showing more signs of indecision. At the beginning of last week, as I mentioned before, we had a pushed up. We tapped into supply, and then after that we had a massive reversal, pushing price down extremely low, and then on Friday, later on in New York session, we actually had a huge push up, bringing us to where we are now, right back to the middle. So tapping into supply, coming back into demand. I mean, we're just kind of in between the range for now. But if we go with weekly structure, I mean, looking at this, it's more likely to come down. So, sorry, moving on to the daily next. So if you look at the daily, so we had that bullish order flow continuing. So I said we kind of gapped up right as the market opened, and then just saw continuation nearly throughout the day, all the way into 4-hour supply before having a reaction off of it. Then after that, we retested the extreme of the supply, and then had a massive push to the downside. So this was I believe the CPI day, where we had the announcement of the inflation. which just shot the dollar up. And then after that, we more or less had a couple days of consolidation. And then on Friday, you can see we had one last push down, liquidating the lows from the range. And then after that, having a massive push to the upside. There is daily imbalance right above. We could target that. And it's also actually, if we look at the last candle, I mean, this entire area is technically supply. So we would tap into that. Potentially could reverse after that. But let's see if we get a little more clarity on the 4-hour time frame. Now I marked some things on my chart here. And when I look at this, at least for me, it gives a very clear picture of what to expect next. So as I mentioned on the daily, we started the week with a continuation, with that huge push to the upside. Had a huge reaction. After that, consolidate a little and then push right back up to retest the extreme of the supply. And then after that, we just slammed right back down with that CPI news. But have we really broken anything significant? We can say, yeah, we broke structure here because this area created the higher high, so that would be a structure break. But we haven't done anything on the daily level, and this is actually the daily supply. We came back down into daily supply. We started to consolidate in this trading range. We were here for a couple days, and then on Friday evening we started to show some massive signs of strength. Had a retest and then continuation to the upside. But this actually tells me a lot. For those that are wondering what those letters on my charts are, those are the events representing a Wyckoff schematic. And for those wondering what Wyckoff is, look it up on Google. The Wyckoff method should come up at the top of the list. So now let's look at what happened in this trading range. You can see that we had that aggressive sell-off, which created the selling climax. So SC is selling climax. We immediately reacted off of it, created an automatic rally. So AR represents automatic rally, and then immediately came right back down and created a secondary test, pushed up higher, and starting to show some signs of strength. And then we came right back down, and you can see this is a little more corrective, where we created a secondary test. And this would be a phase 2 secondary test. And then once again, reacting from this secondary test, once again pushing up, consolidating a little before coming down one last time to liquidate all the lows that were created up to now, creating a spring with a huge reaction to the upside, then came back right back down for one more retest, which is this test, before a massive push to the upside. We actually broke the AR, broke the entire range. Thereafter, we broke the 4-hour imbalance as well. Didn't come into the daily imbalance. We nearly tapped it, but we missed it. But we had a reaction off of it. Came back down a little. There was actually some demand that was created on the way up, and then reacted off that, and once again pushed up. So what's next? I mean, when I look at this, I mean, this is clearly a very, very clean accumulation schematic. So I'm only looking for price to go to the upside from here. We could come down a little further to test supply and then continue to the upside from here. But at the same time, once market opens, we could see the same thing that we saw last week, where we just continue to push to the upside all through Asia and into London. So when I look at this, I mean, at least for me, when I see this, I cannot get a clearer picture of what to expect next. This will likely continue a ways, at least until FOMC. And assuming this schematic plays out, our first target is a 4-hour imbalance and the 4-hour supply. But if we look at the overall structure on the daily, so if I go back to the daily, if you look at this from the structural point of view, so we broke the lows here. After that, we had a massive push to the upside, tapped into supply, came back down, retesting demand. When I look at this, I mean, this looks like the first sign of strength, a pullback to retest to demand, and then creating another leg that's just going to continue up and break the previous high and continue to the upside. So after analyzing the chart, the only bearish scenario I can think of as of right now is a retest of this supply before coming back down and going for the lows. And that could make sense because we could have a couple bullish days to bring us back into this supply. And then after that, when FOMC announces interest rate hikes, we can just come crashing right back down. But let's just go back to the 4 hour. So I don't want to go too far and over rely on this schematic because honestly anything can happen. But if we do assume price does go up, let's see the reaction from this supply level. It could react and reverse from here. It could also react and continue up and break it. And if we break the supply, honestly, when I look at this, I would expect the daily supply to be the next target. Yeah, we have some manipulation here, an expansion here. This could also be a target for potential reversal. But at the same time, if we have this massive push up, I feel it's just going to continue all the way up into daily supply. But like I said, don't forget, we do have the Fed increasing the interest rates. Normally, it should strengthen the dollar. But like I said, I mean, if it's an increase to expectation, which is 75 base points, I mean, it could appear as inefficient for the current situation. And it could have an opposite reaction, decreasing the strength of the dollar, pushing you up even more. So anyways, that more or less sums up my weekly analysis. Let me go down to the 15-minute and just have a look on some trading ideas for Monday. So like I said, come market open, anything can happen. We could open on Monday with a gap and start pushing up from there like last time or like last week. But personally, what I would like to see is a pullback before we get continuation. And if we get a pullback, I would like to see this flip zone being the area that price comes to. So let me just explain. So as I was explaining during the 4-hour analysis, we had that massive push up, reaction off supply, started to come back down. We came back down into this inside bar. This sell to buy wick can be seen as an area of demand, but refining it to the wick we just tapped into. We reversed off there, reacted off this supply, came back down, created this demand zone, which is a flip zone, as it was created after the reaction off the supply, before breaking the last point of supply. So that's why I see this as the most likely area that I would like to see price to come back to and retest before pushing up, assuming it does come down before pushing up. And like I said, assuming my higher time bias is accurate, I mean based on what I was explaining with that accumulation schematic, I'm expecting this to go quite a ways higher. I mean, for me, this is just a start. Honestly, I mean, it could come down and pull back lower, but as we've already done a retest of demand here, especially after that massive push up, for now at least, I don't see it happening. I don't see it going any lower than here, and preferably to the flip zone. But anyways, that's why I'm hoping that we get a pullback, so we get an opportunity to look for longs to take it up to the upside, following the higher time frame analysis. So for Monday, I'll just be looking for longs, regardless of if it's during Japan Open. I probably won't enter trades before Japan Open, because honestly anything can happen at that time. We usually have some big pullbacks before Japan Open. So I'll stick to Japan Open as a potential area to enter trades, especially if we get a pullback to this demand zone around that time. And like I said, at least for Monday, I'm looking for the price to continue to the upside and probably continue on until Wednesday. So anyways, that sums up the weekend analysis, as well as the Monday analysis, or the Monday forecast. Hopefully you guys found it useful, and hopefully it wasn't too long. Let me know your thoughts on the market for next week by leaving a comment below. And as a reminder, if you found value in this video, please be sure to click the like button and subscribe to ensure you don't miss any future videos. And enjoy the rest of the weekend, and look forward to seeing you again for the next one. See you guys soon. Peace. Hey, you made it to the very end. Thanks for that. If you could do me one more favor and click the like button and subscribe if you haven't already, it'll allow the YouTube algos to kick in and help this channel grow. Thanks again. Cheers.